Despite the traditional ebbs and flows of the stock market, there is one stock that has recently stolen the spotlight: GameStop, or GME. Over the last several months, this once-forgotten retailer has dominated headlines and sparked widespread debate. In this video, we will dive into the madness that has surrounded GME stock, exploring why it could be the right time to buy and hold, and how the market might react with an upsurge in the buying of AMC stock. The extraordinary turn in GameStop's fortunes can be attributed to the power of a group of individual retail investors, frequently organized on social media platforms like Reddit. Their collective interest fuels a buying spree that has catapulted the stock's value beyond all expectations. Most investors commonly understand the change in GME stock's performance can be characterized by its increased volatility. This could make it appear risky, but there are clear signs suggesting that it might be an advantageous play rather than a precarious venture. As the narrative of GameStop continues to develop, it has brought to light the prowess of retail investors, previously underestimated, in effecting significant alterations in the stock market. Their concentrated and collective buying, mostly a means of bringing about a short squeeze, has caught the attention of both industry veterans and outsiders alike. At this juncture, the question that emerges is whether GME stock is a potential asset or a looming catastrophe. To assess the situation, let's delve into some peculiar phenomena currently at play in the stock market. Unlike seasoned institutional investors who are driven mainly by profit margins, retail investors are often emotionally invested in a cause. Their holding and purchasing of shares carries with it a message of solidarity and resilience against the dominant norms of the market. This impassioned stance may see GME stock surge once more. Another factor to consider when contemplating an investment in GME stock is the short interest. The ratio of shorted shares to the total number of GME shares has been high, making it particularly susceptible to a short squeeze. Any positive catalyst that sparks a rally in the stock could result in a rapid rush to cover short positions, further bolstering the stock's value. Additionally, the fundamental aspects of GameStop, such as strong e-commerce prospects and a renewed digital gaming sector, lend further support to the potential attractiveness of its stock. The company is also undergoing a dramatic management and structural transformation, another variable that could positively impact the GME share price. If the market does see a rise in GameStop stock, one possible consequence could be the acceleration in the trading of shares of another hype stock: AMC, the classic American cinema chain. AMC has found itself in a similar situation as GameStop, rallying due to widespread retail investor interest. While some may be reticent to invest in AMC, espying it as a heavily shorted stock in its recovery stage, there is no denying that the increasing interest in these meme stocks among retail investors could pave the way for a significant market development. The contention between the traditional investors who advise on fundamental valuations and these new-age retail investors driven by collective social platforms is the current war on Wall Street. Consequently, the market behavior in the next few days, weeks, and months is anticipated to be intriguing and potentially trend-setting. Amidst these unforeseen ups and downs, it warrants caution when entering this ever-evolving market. Investors must critically evaluate their risk appetite, perform comprehensive analyses, and remain agile amidst rapidly occurring changes to capitalize on market opportunities or shield themselves from impending pitfalls. As they reflect on their future market pursuits, investors must consider not only the day-to-day stock developments but also the underlying motives. Not all that glitters is gold, and not all soaring stocks are sound investments. At the same time, investors should not overlook latent opportunities just because they seem untraditional. Concurrently, it is essential for regulatory bodies to ensure market integrity, prevent undue market manipulations, and protect investors from significant financial risks. Striking a balance between free markets and fair play is an enduring challenge, especially at the crossroads of market revolutions. As the landscape of stock trading continues to evolve, the only constant will likely be the presence of unforeseen market phenomena and the need to adapt. Adhering to shrewd risk management and evaluated decision-making processes can help navigate these turbulent times, either capitalizing on unique opportunities or creating one for yourself. Irrespective of the stock or the environment, the goal of every investor is likely to maximize value from their investments. With the shifting tides in the market and the roar of retail investors growing louder, it is more essential than ever to be well-researched, cautious, and responsive in your investment strategies. The unprecedented saga of GME stock continues to enthrall and astound the stock market landscape. With the story of a fading retailer turning into a crowd-driven movement, it serves as a clear representation of the evolving dynamics and the significant impact of these shifts on market behavior. At the same time, the rise of retail investors, orchestrated via social platforms, demonstrates the democratization of finance, the gradual erasing of barriers to enter the realm of stock trading, and renewed power in the hands of the retail investor. This fascinating, chaotic stock saga makes one thing clear: the stock market isn't just about the numbers and charts anymore. With information more transparent than ever, narratives, perceptions, and stories around stocks are playing a role in their valuation and performance. All these factors, constituting the whole of the current market scenario, should serve as an essential guide for the investor. By taking into account the complex market dynamics fueling the existence of GME and the ripple effects caused on other stocks, investors can better evaluate prospective stock investments and be ready to adapt to potentially radical changes in market behavior. Hesitancy and confusion may be commonplace amidst whirlwind shifts in the stock market, particularly in the face of unconventional occurrences like the GME saga. Nevertheless, the lack of clarity should not be a deterrent, but instead should be perceived as the pathway to a deeper understanding. As the wisdom goes, knowledge is power. Hence, it is incredibly beneficial for investors to stay updated, understand the market dynamics, and the influencing factors associated with the stocks they plan to invest in. This is how you develop a tower of strength in the face of market uncertainties or trends that seem incomprehensible. In conclusion, the rides of GME and AMC are just glimpses of the larger democratizing trends in the stock market. In spite of the differing perspectives and harbinger of risks, considering these stocks as part of a diversified portfolio, they could serve you well in the long run. It is also important to keep in mind that investing in stocks is not to be considered as one of those get-rich-quick schemes. It's a long-term game that requires strategy, patience, discipline, and good research. While the investing path may not be a smooth ride and could see substantial shifts altogether, the key takeaway for every investor here is to stay informed, patient, optimistic, and to hold on to their convictions. They should not get disheartened with the downturns, as they also provide opportunities for those willing to take calculated risks and be patient enough to see their investments grow. Every fall is not permanent and often provides an opportunity to invest at a discount. Though investing in stocks is often a solo journey, with investors making decisions based on their preferences and beliefs, but the strength of the meme stocks movement in influencing market dynamics showcases how community decisions can collectively sway market trends. The significance of this dynamic is likely to grow. The era where investing decisions were primarily seen as an individual affair might evolve into a community-driven process. Nurturing this conceptual change while honing decision-making abilities in line with personal financial goals will likely be future investors' primary challenge. It's important to remember, though, that taking advice is divergent from making decisions. It's still the investor's prerogative to make the final decision. So, while community-driven wisdom can educate your choices, maintain a level of independence in your financial journey. In conclusion, the current brilliant chaos of the stock market, in particular the towering presence of GME and the correlated surge of AMC, serves as a powerful lens to understand the multifaceted layers of stock investing. It reminds investors of the encompassing spectrum that consists of both quantitative values and qualitative influences.